Back to the Carter Farr YouTube channel. Welcome back to the team. Hope you guys are all having a great and amazing day today. Now in today's live stream, today's video, we are diving in and we are looking at the one, the only Ford Motor Company. We're going to be looking at what's going on, answering that main question of should you invest in it, and obviously why we've got an extreme sell-off in the matter of one day. So I'm just making sure we are good to rock and roll and there's no issues with the live stream. So if you guys have any questions, by all means, ask them down below. We are good to go. Also, guys, in the chat room here, for those of you that don't know, I just released a brand new swing trading course. I'll put it down below. I put it in the chat, so if you guys want to check it out, you guys can use code YouTube and get 20% off. And we talk about swing trading. We talk about the psychology, the strategies. So I hope you guys all enjoy this video. But overall, check that out. Let's dive into what's been going on. Well, as of today, we've seen extreme sell-off from Ford Motor Company. Obviously, anytime something like this happens where the stock literally goes from highs at $11.35 all the way down to $9.90, something is going on inside the company. Now, as of today, Ford Motor Company came out and they released something called an earnings report. This is when they give you all the details about the stock. This is where they give you the fundamentals, the cash on hand, the revenue, all that stuff, and they didn't do very good. They actually missed their revenue by about 3%. On top of that, what they also announced is Ford is delaying a $12 billion investment in the electric auto space, which is heavily competitive into the beating Tesla. I'm sorry, I got a comment from my wife. Welcome to the show. And it just threw me off, so I'm sorry. But anyways, so Ford is delaying a $12 billion investment into the electric auto space, which in my opinion is a major deal. You know, the electric auto space is ready to outperform a lot of the combustion engine car companies. We've seen a lot of buying pressure, and with that being said, we've seen companies like Tesla, which has absolutely exploded, I think we all know, over the course, of the past 5 years. So with Ford announcing this, obviously you're gonna have sell-off. On top of that, Ford, they did reach a deal, the Detroit automakers deal, the UAW, a new contract, and it's already gonna raise the cost of these cars because these deals are getting more and more expensive. So what happens when they do that? What happens, right? One, they're going to be increasing the price of the cars, obviously, because if they're paying their people more, they're going to have to make that money back somehow. So in most cases, they're overall going to increase those wages. On top of that, price of cars are going to go up, and it's just going to get more expensive to buy a car. And this is why, is because these UAW workers are getting these record deals. All right. On top of that, missing earnings. So we're seeing a combination of a perfect storm with Ford Motor Company, causing the stock to absolutely get annihilated. And answering that question of should you invest, obviously, in a Ford Motor Company, guys, for me to invest in a stock, one of the most important things that I look for as a more of a, I swing trade, but for like a long-term investment into Ford, I wouldn't even look at it. It has $93 billion in debt. $93 billion in debt compared to their cash on hand at $42 billion, meaning they have more long-term debt than cash on hand. So if something ever happens with Ford Motor Company, you're gonna have panic. They're gonna have to take on more debt because there's not enough cash to pay off that debt. As well as what we've seen with their profit margins being at 3.5 for every $100 Ford brings in, they only make $3.50 for every $100 Ford brings in. Comparing it to other other car companies, we can pull up Tesla here and see what they have. Tesla's is 7.9, and the only reason why it's that low, normally it's actually about 12 or 11. The only reason why we've seen Tesla's net profit margin down is because they've cut the price of their cars, and that's why, and that's down 48%. So with Ford's net profit margin only being 3.5, that's not good. So for me to answer that question of should you invest, now for me, I definitely think with a long-term approach, I'm not investing in it. I think it's way too risky. I think look at this chart. You guys tell me if we should invest into this. So looking at it the past, we can go 2 years. It's flat. It's not very good. It's very volatile, but for like a possible swing trade, this is where I definitely think Ford could play a huge factor, is on a possible swing trade. So if we look at it, just looking at this chart, what do we see a tendency? We see a tendency of actually getting buying pressure near and around this price at about $9.84. Just looking at this long-term chart all the way back since 2021, we've seen tendencies of getting buying pressure. So as we zoom in here, we got buying pressure in here. We got buying pressure here. We got a little more here, a little more here. And then recently, we've gotten a lot more sell-off near and around that zone, that support. So I'm not saying to buy Ford Motor Company right now, right on the support. But what I do think we should do is put it on our watch list for a possible swing trade. Yes, we could see this stock as we zoom in. If we hopped in at let's just say we hopped in at 996. That's our buy. What would we do? We could set our stop loss. We could stop. What do you think of the collapse in the trucking industry? So, pretty much one of the things with the trucking industry that does concern me, honestly, is I hate to say it, is Tesla, because Tesla right now is everybody's geared on these electric semi trucks. You guys don't realize the amount of power you need to make those cars, and not even make them, but to charge them. It's incredible the amount of power we need. So I definitely think the overall trucking industry right now that's gearing towards the electric auto space, I definitely think they have a long ways to go. I know a lot of people are super electric, focused, but for me, I don't see the value there just yet. Ford doesn't take care of its workers, both unionized and non-unionized or non-union. That heavily turns me off from buying Ford. Microsoft, on the other hand, employees are happy with their pay packages. Of course, one of the most common things, actually, a lot of investors I look for too, if you look at the happiest places to work, we can pull it up because it's something to really understand. Happiest places to work. Now, if we look at them and then we look at these, if we look at these companies and we look at the share price, what we have a tendency of seeing, it's really incredible that these are some of the best performing stocks. And that, I'm not saying it's because of their workers, but I'm saying you are 100% right. Happy employees mean better, successful companies. Looking at number 6 is NVIDIA. NVIDIA this year is up 224%. Looking at, a variety of other ones here. These are some of the, more iconic, great growth stocks that we see. So that is 100% true. And this is something that I actually love to look at. Getting investment advice is looking at some of the stocks that are performing, or not stocks, but some of the companies that people like to work because we have tendencies of seeing better revenues, which will mean better profit for the company, which will mean what? Better share prices. We'll see better growth. You mentioned Tesla. What do you think about Edison Motors? Honestly, I'm not sure. We can pull up the chart. I think I've looked at it actually in the past. Edison. I'm not sure what the ticker is. If you know the ticker, let me know. Yeah, I don't see it. We can pull it up. I'll Google it. But But yeah, this is one thing I'd love to look at. Edison Motors. Oh, I spelled it wrong. Whoops. Stock right here. Okay. It must be EIX. Let's pull it up here. EIX. Aha, there we go. Something like that. Okay, so looking at the chart, little volatile, which is fine, but let's zoom out and kind of see what we got going on here. So one thing I like, anytime, the first thing you guys look at when you guys evaluate a stock is the trend. Trend is super, super important just because you get a general idea of where the stock is going. So yes, in the long run, we do see a slow growth with Edison Motors, which is good. Basic support, for me to, Tesla made a lot of employees rich on their stock options. Sometimes I wonder if everyone at Tesla only cares about the stock price to get bonuses. Tesla could sure start looking like Elon soon. Elon, I'm not sure if you meant Elon. But yeah, I'm sure that's true. Honestly, I'm sure that's true. But getting back to this, let's see if we can look at some of the revenues on this financial right here. Okay, so looking at EPS is 1.6. So we have seen increasing revenues up from 2022. It's up about 15%. Let's pull it up and see EIX. We'll just do this. Boom, let's see what we got. Okay, so looking at it here, the revenue is down 1.1%, which honestly, a lot of people like to make this a big deal. Anytime they look at a stock, yes, revenue is important, don't get me wrong, but companies fluctuate, they go up and down. If you look back at like Apple or Microsoft, do you think they've ever had a bad quarter? Yes. And so one of the things that I personally care about is cash on hand and net profit margin, just because I want to make sure the company that I'm investing in is growing and understanding where their money's going. So that's a good indication where they're working on their net profit margin, growing that. You get a better gauge of how well this company does, and is going to perform in the long run. So net profit margin being 8.9%, comparing to Ford at 3.5, you guys can clearly see that this is super, super important and clearly see how low Ford's actually is. But let's go ahead and click on here. All right, so cost of revenues down, the net change in cash revenues down. But overall, I mean, for me to look, I would honestly probably have to tell you to buy this. I probably would have to look at it for probably like 30-40 minutes. And I'm a type of long-term investor where I love to just know everything about the stock. But I'm not saying you can't make money off it. I'm saying, I definitely think it's on the better side for sure. For me to like go heavy into it, just looking at the share price, I do honestly like how it's below that 200 moving average line. So they are startup diesel electric semi. Oh, that's cool. Where Tesla should have went with their semi. Yes. One of the sectors that I do think is going to do relatively well, like you were saying, is these diesel electric. I actually was looking into it. That's crazy you said that. I think that for semi trucks, this could be the move. And I can't believe I drew a blank on it earlier. But this could be the move. Just because right now, I don't think we're seeing the growth of these batteries, to be able to go 300 miles, 400 miles towing. It's going to take so much power. But something like this where it can use gas or use diesel, and then convert to battery to save power, save mileage, save diesel. I think that's a better approach so something like this honestly is very, very tempting for me. I'm going to look at it. I'll probably do a video sometime this week actually breaking down this whole company. I'm writing it down in my notes, EIX, and we'll do it just because this is super, super catchy. And I appreciate you, Kevin, for bringing that up to me. But yeah, so we'll see what happens though with the sector here. I'm honestly excited. And with that being said, I'm not surprised why we're seeing revenues down as well for a lot of these car manufacturers, just because we're seeing interest rates up as well. I didn't even bring it up earlier, but we're seeing anytime you have rates up, you're going to have a slowdown in spending. What happens when you have slowdown in spending? Less revenue. What happens when you have less revenue? You're going to have share prices fall. So, in the grand scheme of things, it's not that big of a deal. I'm such a long-term investor in most cases that honestly, like, I look a minimum of like 2 to 5 years down the road for me to even look at it. But yeah, EIX, definitely I'm going to look into the diesel electric semi. That is very, very interesting, but we'll see what happens though. But yeah, so guys, we'll end it here. I appreciate you guys joining me. It honestly means a lot to me that we got some people in the chat room, and I'll put my course down if you guys want to check it out. Honestly, if you guys are watching right now, the first two people that go to my Instagram and follow me and send me a DM, I'll give it to you for free. So you got to go do that. But yeah, we'll see you guys later. Hope you guys all have a fantastic weekend. We'll go live, like I said, every single night is the plan. That's the goal. I was sick the past couple of nights. That's why we haven't gone live as much. But yeah, so guys, I appreciate every single one of you guys for stopping in. You guys mean a whole bunch to me. But remember to stay happy, stay positive, and stay safe out there. And we'll see you guys in another.